JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of May 2022. So yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so yeah, had a bit of a glitch here. Okay, so I hope everything's fine now. Yep, so before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD brokers.com website. So yep, which you can I believe you can find it useful, as if you click here on Start Learning and click on the Market News and Analysis, it will take you to this page, which is updated on a daily basis. So yeah, check us out here on jfdbrokers.com. Now, okay guys, let's jump into the charts. Now then, the first one I want to pick up here is Nikkei 225, just to show you what's happening here. So the index continues to oscillate around that 21-day EMA, so not much is happening there. Yep. Not much is happening there. It's still kind of trading below this downside line taken from the high of the 30th of March, and also above this other short-term tentative trend line, which is the upside one, and it's drawn from the low of the 9th of March. Now, in a way, as I said before, to be honest, not much has changed from my yesterday's analysis. I'm still, if I'm looking for some upside, I still need to see a break of this downside line for a move lower here in this area in between the two trend lines. Well, I would prefer to see a drop somewhere below the midpoint here, this 26,300 zone, and then yeah, we could go for a possible test of this upside line. However, a clear drop through this upside line and this key highlighted support zone here would be needed in order to get a little bit more excited with, let's say, further declines. Yep, Evo, good morning to you too. I can see you in the chat room there. So I hope you're having a wonderful start of Tuesday. I hope everybody else is also having a wonderful start of Tuesday. It's not really working out well for me somehow. Everything's kind of not in the same not the same way, but anyway, let's gather together all my thoughts here, and let's plow through it. Okay, so in Shanghai Composite, okay, this one managed to remain above the downside line. I talked about this, and yep, it managed to rebound. However, we're still below that 3,100 and 3,100 level. So in order to go for some higher levels, I would like to see a nice good clear break above that area, because somehow it continues to provide its resistance, and if we clear that hurdle, then potentially more buyers could join in. So keep that in mind. For the downside, I need to see a drop below this area, below these two trend lines here, And also maybe just for that extra confirmation, drop below the 3035 level could do the trick for a few more sellers. The German index DAX, yeah, it's pushing higher, or at least trying to. This is where it's interesting, because the index did have an interesting day yesterday. Let me just quickly put a cash index on for myself here. So we did initially decline, but then you look at this. I mean, we failed to drop below that 13,829 zone, and then we rebounded and climbed back above the 21-day EMA. So the cash index is currently sitting around, actually above the psychological 14,000 mark. So so we're somewhere near the 14,070 zone. So somewhere around here, we're getting closer to this downside line. It's going to be quite interesting to see if we can actually break this one or not. If we can, then if we can break this downside line taken from the high of the 5th of January, if we can break that, then that's where potentially more buyers could join in. At the moment, I'm just playing a bit of a waiting game here, so yeah, let's see how this is going to play out. Now jumping into the S&P 500, so yeah, this one managed to push higher yesterday, and once again it got held near this area that I talked about, this highlighted area near that 4,057 level, which is, by the way, the lowest point of May of 2021. So it continues to provide provide a hold up, a resistance. So if you're looking for something, for a move like higher or something like that, then certainly yes, we need to see a clear push through that area. At the moment, the cash index is trading at around 4,027 zone, so we're still below this, and I would say like this, that if it struggles to overcome this highlighted territory, another decline could be possible, guys. Dow Jones Industrial Average, I haven't looked at this one for quite a while, and let me just remove all the drawings here. From the very short-term perspective, we can see that we're still trading below this downside line. Taken from the high of the 21st of April, we found support last week near this 31,228 zone. You can see here we have rebounded from here at almost around 1,000 points, which is nothing for Dow Jones, but currently we are finding a bit of resistance near this area, near the 32,450 level. So if we take a look at the cash index, we'll see that the price is currently sitting at around 32,340 levels. So we're above yesterday's close, but we're still somewhere below this hurdle. Now, probably I need to kind of have a look at it actually, because I think this is going to be more of an area. Let me just mark this very quickly here. So yeah, I think this is what I'm going to be keeping an eye on. Right. Now, the reason, I mean, I wouldn't say it's like just one specific level here, but it's more of an area. It's going to be quite interesting to see if we can actually get a hold up somewhere near this highlighted zone here, and this highlighted zone is between the 32,450 and the 32,579 levels, so approximately around here. Again, if the index struggles to overcome this, then maybe, like I said, like I said with the S&P, another decline could be possible. We could see maybe a push lower, maybe a move even back to this inside swing high of the 12th of May, which is around that 31,915 level. So, however, if that gets broken, then certainly yes, a further decline could be possible. So, in other words, right now, I would say something like this. Something like this is something to watch right now, because again, if somehow the index struggles to overcome this highlighted territory, then yeah, and I'll consider this as my main scenario. However, if this downside line gets broken, that's where it could become a little bit more interesting for a few more buyers, and of course then we'll start aiming maybe for something like this here, near the 34,106 zone. Again, I get it, it's maybe quite a big area. Maybe there could be a level in between here somewhere, and you're absolutely right. There could be. So the first one, what I'm going to be aiming for will be that area near the 33,055 zone, which at the moment it seems like could coincide with the 21-day EMA. So a good potential target, but if we do reach that, then yeah, I will take it from there. However, for that move, still, as I said, we need to see a break of this downside line. At the moment, I am considering this scenario. As my arrow shows here. Let's see if this is going to work out or not. Now, DXY, the dollar index. So, beautiful retracement. So I talked about this yesterday. I said that if we drop somewhere below this 104.46 territory, somewhere around here, that's where it could become a little bit more interesting for a few more sellers. However, as you can see here, we are approaching this key support zone. Now, now this is the 103.82 zone, and if you remember, I talked about this. This is the highest point of 2017. So we're approaching that area. Let's see if we can get a hold of somewhere around here. If we can, maybe a bit of a rebound here could be possible, something like that. However, if it fails, well, that's where it could become a little bit more interesting for a few more sellers, and maybe all those dollar pairs, you know, could have a bit of a reversal. But again, you know, let's not rush into anything. Even if it, let's say, even if it drops below this area, still this, you know, this whole move lower could be classed as just a temporary correction before another possible leg of buying, because we are still trading above this upside line taken from the low the 31st of March. So yeah, the bears could get excited in the short run, but again, in the long run, or in the medium term, actually more of a medium term, at the moment it seems like the bulls are taking a break a little bit. But again, let's see what's going to happen near this 103.82 zone. That's what I'm going to be aiming for at the moment. Gold. So beautiful retracement yesterday. Look at this move lower. So we dropped below that 1800 level. We drifted lower and almost managed to reach my target, which was between the 1778 1780 levels. We have kind of reached an area near this level, near the low of the 3rd of February, or in other words, the lowest point of February of this year, and that was near the 1788 zone. So a beautiful test of that hurdle, and from which we rebounded. I'll keep this on the chart for now, just because it kind of worked out. But again, as I said, my target is this around here, this area between the 1778 and 1780. But for that, looking at the the situation at the moment, I would need to see a rejection somewhere near these two lines. So basically, we're now kind of going towards that test of this upside line, which we broke last week, and we're kind of going for the test from underneath. Also, we're approaching this downside line, which is taken from the high of the 18th of April. So in other words, at the moment I am, we're considering a bit of a corrective move higher here, but let's be very careful, because if this holds here, these two lines hold, then, well, another decline could be possible. WTI oil, guys. So look at this beautiful move here, and this is basically it worked out interestingly, but it broke the upper side of the of this wedge that I was talking about, and that's why I kept on saying it'd be a possible wedge, because at the moment, at that moment, it would look like one. However, we violated the upper side of it, so we can actually get rid of this. And if you want, we can actually put this and make it as a rising channel, because at the moment, yeah, I mean, we can consider that. We've kind of, let's put it this way, if this was the peak already, so I mean, we can draw it this way. Anyway, in terms of what's next. Right. So if this is of course, a rising channel formation, and we continue, for example, to respect the upper bound of it, then maybe a bit of a retracement here could be possible. Now, I'm not saying that, I'm not kind of going for a large one, but maybe even actually a drop back below that, not below that, but towards that 21-day EMA could be possible. However, we are very close to this area, the 114.79 zone, and if you remember, let me just jump into a monthly chart. If you remember, I talked about that level a lot, and that's the highest point of 2011, guys. So we have approached that area again last month, as you can see. Sorry, not last month, the month before that, in March. We did overshoot that level. We kind of climbed strongly to the upside here. So yeah, we are now near this key resistance zone, which is the highest point of 2011. Let's see if we can break that, because if we can, then, well, this is looking quite ugly, and we could see, or should I say ugly for the sellers, and we could see this one pushing further north. At the moment, I would say, for me personally, I'm just going to observe this one, because we are near, like I said, we are near this upper side of the rising channel. If I'm looking for some downside, maybe a drop below this 111.34 area would be needed. That's the high of the 5th of May, and then we could go for that test of the 21-day EMA. But if it, like I said, with the upside, if you're looking for some higher levels, then yeah, I'm watching this highest point, not the highlighted one, but the highest point of 2011. I'm watching it very carefully. If we clear that, my next target is the 116.61 zone, marked by the high of the 24th of March, and there we go. And then if that gets cleared, then, well, this opens the door towards those 120s, and, well, we'll just have to then probably monitor the highest point of March. Litecoin, very quickly on that one, not going to spend too much time on it, but we're currently stuck in a little range here. After we found support near the 64.60, now don't get me wrong, we kind of overshot it, but we found support, let's say, here near the 54 level, from which we rebounded, and then the 64.60 started acting as a good area of support, like a good hold-up area. We're still trading below this downside line, so in other words, everything's kind of still pointing towards the downside, but a clear confirmation break is needed. So in other words, for me to aim lower, I need to see a drop below the 64.60 area, and then I'm going to aim for that 54 zone. For the upside, I would like to see a push above the 73.29 zone right here, and then we could target that 21-day EMA, or even this downside line taken from the high the 30th of March. AUD/USD. So jumping into a few pairs now. We have climbed back. We have climbed back above this 0.6968 level. That's the lowest point of January, and we climbed back above it. Yeah, in a way, I would say we are, I think I just wanted to say that we are in positive territory for the year again, but no, that's not the case. I think, where's that 1st of January? Let me just quickly grab that one. Yep, okay, 3rd of January, there we go. So yeah, it's going to be somewhere around here. So 0.7260. Oh, it's like still a bit of a path to make. However, of course, keeping our eyes on the DXY, the fact that it's declining a little bit, maybe it could give another boost here for this pair, although it already gave that. So yeah, we've climbed above this 0.6968 zone. If we continue to trade above it, I'll go for that larger correction towards the upside, towards this downside line. For the downside, I would prefer, of course, to wait for a drop below last week's low near the 0.6829 zone, because a nice drop below it would confirm a forthcoming lower low. But if we start falling back below this lowest point of January, near the 0.6968 right here, then there could be a bit of a possible move to the downside here. However, at the moment, as long as we remain above this area, I will consider maybe a larger correction to the upside. AUD and ZD, so one of my favorite ones. So as you can see here, I talked a lot about this last week. I said that keep your eyes on this downside line. If we get a break through it, then it could open the door towards some higher levels. So we did. We can get rid of this line. Actually, I think we can reuse it. There we go. So we can put this one on the chart right now. We got a nice hold up near this area, near the slightly below that psychological 110 zone, and when we found support near this 1.0978. I can probably redraw a few things here, so I think that now at this point it's better to keep our eyes on these two hurdles, because in order to go for the upside, I would prefer to wait for a push above the 1.11 1.1110, something like that. That's the highest, the current highest point of May. If we get a clear break above that, then yes, we will go for some higher levels, because a forthcoming higher high would be confirmed. Excuse me. The next possible target then could be this one, the 1.1176, and that's the highest point of August of 2018, guys. So yeah, that's where we could be heading to, but again, a confirmation break is needed. NZD CAD, so yeah, this one's having a beautiful recovery. So I talked about this yesterday. I said that in a way this could present itself with a nice opportunity, you know, to go up to the upside at some point. I was keeping an eye on these two levels, the low of the 23rd of March of 2020 and the lowest point of March of 2020. We did drop below that first one, near the 0.8091 level. We moved lower, but didn't really reach the lowest point of March, and we started rebounding. And to be honest, yes, it's looking quite interesting. It's looking quite promising, maybe, that where we could go for a larger correction here to the upside. However, I will go slowly on this one. If we push through the high of yesterday near the 0.8135 level, that's where, yep, I could then go for, or should I say, consider a larger correction here to the upside. But as you can see here, we have this downside line, a tentative one. Yeah, we don't have much area right here, so be very careful with that, guys. USD CHF, so yeah, of course weaker dollar is not helping out here, and look at this, the 1.0028 level did its job and provided resistance. Now again, not the one that, for example, where, you know, it was the kind of the highest point. No, it just kind of kept on holding. It was, the pair kept on failing to stay above it, and it continues to do so today. That level, just to show you what I'm talking about, so this one right here, that level is marked near the highest point of October, November of 2019, guys. So we are there. You can see how well we managed to push higher here. However, don't exclude the possibility of seeing this one as something of a, let's say, a possible bullish flag here. Maybe this is just a, you know, a temporary pause here, and then a temporary like little correction before another push higher, because we have our pole, we have our little consolidation here, and let's see if we can actually pop again to the upside. But for that, I will start looking at higher levels if we do move above this 1.0028 level. If we stay above that, then yes, I'll continue targeting the upside. If we remain below it, then maybe a bit of a retracement here back to this 0.9975 zone could be possible. So yeah, we are at a very interesting spot. I do understand that some of you are probably really hoping to see maybe a larger correction here to the downside. However, at the moment we're still, you know, we're still not there yet, so it still could continue moving higher. GBP, JPY. So we're very close to this downside line. I talked about this. Now the key the most important question here is, can it hold? Can this downside line hold? If it can, another decline could be possible here, and yeah, we could let's say consider maybe a move back to this 200-day EMA, and then so on and so on. At the moment, yeah, we're keeping an eye on this downside line. If we clear that and stay above it, then yep, we could see more buyers joining in. More buyers could join in on a push above that 21-day EMA as well, so don't exclude that. And yeah, then we'll aim for that 166.25 level. So pretty straightforward here, to be honest. I mean, at the moment, like I said, I'm watching this downside line. I want to see if the pair can break it and most importantly stay above it. If it'll just break it and, you know, drop back down, then we'll just get ourselves a nice false breakout. GBP USD, guys. So yeah, this one pushed through this downside line, so it's looking quite positive. However, as I said before, I need to see a push through this 1.2411 zone first in order to get a little bit more comfortable with the upside. At the moment, yes, I'm leaning a little bit more towards the upside. However, this upside move could be still seen as a temporary correction before another possible leg of selling. So, because overall, don't forget that we are below all of the EMAs. So my initial target will be this 21-day EMA, but only if we push through the 1.2411 zone. A quick update on Euro Ncd, guys. So yeah, we failed to move, or should I say stay above this 1.68 territory and started drifting lower. Now we're resting on that 200-day EMA near this upside line, taken from the low of the 5th of April. So yep, at the moment I would say, if you're looking for some downside, further downside, then yeah, wait for a drop somewhere below this upside line and a drop below the 1.64 territory. If you're looking for some higher levels, then of course you still have a chance to jump in somewhere near this upside line, but again, whenever we test, you know, the kind of the upside line, the more tests we have, the more chances for it to break. So, but again, it also has the same chance of, you know, rebounding. So it's a bit of, that's why you always, whenever we approach the, let's say, the upside line again, or the downside, the trend, whenever we approach the trend line again, be very cautious, because maybe might not bounce, maybe it will break, but you always need to kind of prepare yourself for that. So whenever, if you are, let's say, going long in this situation here, then have your, you know, have a tight stop loss just in case it actually breaks the upside line and moves against you. And finally, EURUSD. So this one is pushing higher. So yep, DXY is helping out here, and this pair helping out the bulls of this pair. But yeah, I would say if we stay below the 1.0495 area, then yes, we could see another decline here. So keep your eyes on this hurdle. If you remember, I talked a lot about that hurdle last week. I said that this is the this was seen as a key support zone. Now it could take the role of resistance, and if it holds, yeah, another decline, guys, could be possible. Where I'm going to aim for that 1.0340 zone. And then we'll take it from there. Maybe that will get broken, and you know, this will confirm another forthcoming lower low, and potentially more sellers could join in. For the upside, it's going to be straightforward for me. I'm still being very conservative here, and waiting for the push above this 1.0636 territory in order to get a little bit more comfortable with higher levels. Okay, guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys. Your views, your likes, your comments, everything I really, like I said, I really like. Thank you very much for those. But yeah, if you want to join me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.